Hello, Uncle Jim here. Today I want to share with you what I'm doing to weather the storm of these crazy bear markets. I believe today, and I'm actually filming this on Monday, and the markets have hit bear territory. Now, I'm not sure the Dow has, but it's really close. But I know the S&P has, and the Nasdaq's been in a bear market for a fairly long time. And I've had some shares get assigned recently. And I have several that are very deep in the money that probably will get assigned. So I want to share with you how I'm dealing with this, what I'm, give you some tips to actually help you get through this period a little bit easier. So I think these tips are going to be very helpful to you. So please stay tuned. Let's go ahead and get started. Now, what I'd like to start with is just kind of jumping into what those key points are that I mentioned in the beginning of the video. First of all, I found it really important for me to adjust my goals. My goal, for those of you who have been watching the video for a while, you already know this, but my goal's been recently to make around 2,500 to 3,000 a month selling options. Now, I'm going to reduce that goal and probably look at making more like 1,500 to 2,000, and actually look at, in some cases, to take losses to roll things out to a lower strike prices to see if I can buy myself a little bit more time to, hopefully not let these get assigned, but give me time to actually move things around a little bit, so I have the ability to not just let these get assigned, but actually manage them. And then along with lowering that goal of how much I want to make every month, I'm also going to lower the risk tolerance, or my risk tolerance. Originally, I had a 20 delta. Most of the trades I've made recently are more like a 15 delta. I'm going to even go a little bit lower during this crazy down market. I'm going to be looking at trying to stay closer to a 10 delta, at least during this time period while the market is going, continues to go down. At some point, it's going to switch course and it's going to go up, and it's going to be a time for selling calls and maybe taking a little bit more risk once we get to the bottom and start recovering and moving our way up. But we're not near that point yet. I still think the market may go down probably overall 30% is what I'm thinking. And I have noticed a lot of the pundits are getting scared. They're beginning to change their opinion. And once people start getting really sour on the market, that's usually a good sign that things are getting ready to turn around. One other thing that I'm doing that's been very helpful to me is I'm trying to disperse my expiration days. That way I don't have a ton of things getting assigned potentially at the same time. So as I'm rolling, I'm looking at rolling, maybe next month, maybe 2 months, maybe 3 months, potentially even 6 months, or even turn it into a leap and go out a year. Especially most of the stuff I've been selling options on lately are value companies I want to own. And there's some great values out there. It's really hard to time the market and hit the bottom. So to me, if I can get within 10 to 15% of the bottom, or maybe 5% of the bottom, I'm doing pretty well. I don't necessarily need to be at the bottom. And then along with that is better planning. I've updated my planning worksheet. I'm going to share that next. And I'm going to actually share some of the trades that I'm looking at currently that are very deep in the money because of this bear market we're going through currently. And what I've added to it is more detail, more information, and I'm actually going to start adding any positions I have that are deep in the money. I did have one position get assigned last week on Friday, and it's actually Big Lots. And Big Lots, some of you may know, had a really bad earnings report, and it just tanked. And it looks like someone went ahead and assigned them to me, and they were supposed to expire July 15th. So this is, I think in my last video I mentioned Ford, and that I had never had something get assigned a week early. Well, this is over a month early, and I believe what's happening is a lot of people are getting margin calls, and because of that they need liquidity, and they have to actually assign some of these in order to bring in the cash to help with the margin call, or trying to get their accounts liquid enough that they don't have to lose everything or lose the stocks that they definitely want to own. So I understand, with the fact that Big Lots, I think it was $15 or $16 in the money. So now I own Big Lots, and luckily I had sold an outer arm on it. So the outer arm is actually above the price. I think Big Lots is like 23, and the outer arm that I had originally purchased is like 27 and a half. So I'm going to keep that for now, and I know that, well, it won't go below 27 and a half because I bought that put along with it. It was a vertical put credit spread. So at the time, I think Big Lots was around 50 or 55. So it's tanked all the way from 55 down to 23. So I'm going to talk about those trades when I go over my planning worksheet, and I'll talk about each trade, what I'm going to look at doing, maybe where I'll be rolling it to, what month, and I'll share some of these same pointers. You can actually see it in action. So I want to thank you for joining me. As always, hit that like button, subscribe. If you're interested in taking a look at my Patreon memberships, the details are below. And with that being said, let's jump into the last part of this video. Okay, I've jumped into my planning worksheet. I actually released this earlier this morning to all my patrons. So you'll be seeing it. This video will be shown, I believe, on Thursday, so it would be a couple days old. So with all these planning worksheets, one thing I like to provide is what I'm looking at, and that's what I have at the very top. So the planning worksheet covers the next 2 to 3 weeks, and at the top I have the stocks that I'm currently really interested in, and you can see these are some real quality companies. Apple, of course, which is way down. I believe it's at a really good value. And I talk about the strike price I'm looking at, the expiration, what the delta, and of course this was as of, I believe, Sunday, so the delta is probably changed in the pricing. I believe Apple may be below 137 currently. That was the current price as of last Friday. It may be like 134, so you might even be able to do better. But most of these relate to companies that I want to own. I haven't made any of these trades yet, but I'm looking at potentially doing some of these today, depending on what happens with the market the rest of the day and the rest of the week. So Apple is what I'm looking at. I also like Prudential. Prudential's come way down and pays a really good dividend, and it's a company I've sold options in before. Next is Qualcomm. I'm amazed at the premium that you can get with Qualcomm. So it's also another, it's probably my favorite currently. And again, if the market wasn't down so much and I wasn't so worried about some of my other positions, I probably would have gone ahead and made this trade. I was just looking at it and I found some really good value with Qualcomm. And again, last Friday it was around 133, and I'd be looking to sell it with a strike price, sell a put probably around 115 and 105, which again, I may still do that later in the week. And that's why I noted it as green. And again, every week I release this spreadsheet and I share it with my patrons as well as what I'm recommending. 3M, another great company, another company that has prices come way down. It's paying a good dividend. I believe it's over 4%. And you'll notice all of these deltas are below the 20 delta. The Prudential was 20 delta. But again, I didn't expect, I thought we were going to get a bounce today, so I did not expect today to be such a down day because Friday was so bad. So 3M, I was looking at nearly a 17 delta, which is like an 83% chance that it would expire outside the money, which in a bear market, that's typically not the case, unfortunately. And then I've got, this is Truist. I bank with Truist. It used to be SunTrust and BB&T. They merged. They have just finished their merger earlier this year, I believe in April, May timeframe. And I think they're going to have a lot of their costs are going to go down because since they finished the merger and it's actually one bank currently, I think they're going to really do well. And like a lot of these others, they're at a really good price. I believe they've come down. They may be as low as 42, 41, something along those lines. So I released that. I also talk about what premium I think I could get per contract. And I talk a little bit on the reason I selected those particular top stocks. So those are the top stock picks for this week. Now let's come down to my trade. So you can actually see I marked these in yellow. The ones in green are the ones I've actually rolled today. And actually, let's start with the very first one, which is LEG. This is Liggett and Platt. This is a company I've been selling options on for a long time. And it's also deep in the money. It's, I believe, right around, well, it was 39 at the end of last week. Now I believe it's like 36 or 37. So, and I've been trying to roll it and I have not been able to roll it as of yet. And you can see here the ex-dividend date is actually today. So it may get assigned to me, which I'm okay with. Liggett and Platt is a great company. When I actually did this trade, I believe it was trading in the low 50s, so I'd be very happy with it at 45. It's not the lowest possible, but it's probably hopefully 20%, fairly close to the lowest point. So 20% above what the low is, and it's one of those that it's a dividend aristocrat and increases its dividend every year. I believe it pays close to a 5% dividend, or like a 4.6 or 4.7. And again, I've been working with it for a long time, so it's one of those companies I really like. The next one is this is what is it? Fidelity National Financial, which is a insurance company, and it's another dividend aristocrat. Pays really good dividends, and it also is deep in the money. I believe it may have gone below 40 today. And just like Liggett and Platt, I've had a really tough time trying to roll it. So what I'm looking at doing with these is, or probably just going to let them get assigned. And since this is a cash secured put, I'm a little less worried about it because the money that's needed for the margin and the cash is already in consideration in my calculations. And it's just like Liggett and Platt, it's at a really good value and it's at a really good price. It's, if you go back 4 or 5 years, it's right there, kind of, the trend line is right around 46. So I'd be picking it up at a good price, and then once the market rebounds, I can look at selling cover calls on it and make even more money when the market rebounds, whenever that might be. Hopefully it'll be in the fall or early next year. You just never know. We'll know a month or two after it's happened. Next is ASO. This is Academy Sports. And like I said, this morning it was out of the money. And I think it dropped by $3, which is almost 10%. And it was in the money. They had good earnings recently. So I went ahead and rolled it. I rolled it out, I think, to the next month. Yeah, I rolled it out to the end of July, and I picked up $140 in premium with it. So Academy Sports, another great company. It's inexpensive, $35.25. I believe right now it's around 32. I believe it dropped, I think, $3 today, so it may be like 32, 33, something along those lines. Because this value, I believe, was again based on last Friday. Next is Cisco, another company I want to own. I don't have any Cisco shares. This is a vertical put credit spread at 50-40, and I've been trying to roll it too, and so far no luck. But I do have the rest of this week to roll it. The other two that I just mentioned, Fidelity National and Liggett and Platt, they have ex-dividend dates of, well, with Liggett and Platt I just mentioned, today's actually the ex-dividend date, and then tomorrow's the ex-dividend date for Fidelity Financial. So I have a little bit more time, but again, I'd be okay with owning Cisco. It's a great company. Now it's actually at $50. I think it's over a 3% dividend, and I think it's going to rebound pretty well once the market comes back. The $50 a share, and that's what I would pick it up at, is a fairly good value. Just like Academy Sports and some of the others, it's pretty near its like 5-year trend line. So I'd be picking it up at a good value. And then next is Citicorp. Now Citicorp is also deep in the money, and I'm looking at rolling it farther out. I have a little more time with it. I believe I can probably roll it as late as Wednesday. And I've been able to, I could either take a very small loss and move it out to like not April, probably September or October. But just like the others, I'm happy with Citicorp. It's or Citigroup. It's who I use for my credit cards. They're, I believe, also a dividend aristocrat. They pay a good dividend and they've increased it every year. Their earnings are down a little bit, and if we go into a major recession, they might get hit a little bit. But that's why I'm looking at probably rolling it a little farther out and sticking to. I'm going to look at a expiration that's not around some of the others that are expiring because I don't want too many of these to be assigned at the same time. But all of these have really good cover calls typically. I looked at Citigroup. I've looked at all these, and they, when the market's going up, you can really do well with cover calls. So that's my plan for those. Now this next one is Intel, and it's in my Roth account, and it actually doesn't expire till the 24th of June. So I do have a little bit more time with it. It's also at a good value at 45, I believe. I believe Intel is like 36, 37. And if I can't roll it, I will let it get assigned. But I'm thinking I'll be able to roll this one, and I'll look at rolling it out probably 3 months to 6 months, mainly because Intel has announced that they're bringing a lot of their chip making back home, back to the U.S., and I think that's a good thing. I think we need to be doing more manufacturing here. So I do like their plans. They're still very profitable. It's just they've given some warnings of what next year's earnings are going to look like, and I think that scared the market with them. And of course, everyone's down in this market. So, and then I also had LAG in my Roth account, and I rolled that today. So I was able to roll it out to let's see, where did I roll it? I rolled it out to September 18th, and I picked up $90. That's one contract. So in my Roth account, which I do videos on it, and it's more like 50,000. But I was able to roll it out, and then I've also rolled out a Lumen credit spread, and I rolled it out to August 19th, and I picked up 119 for those three contracts of Lumen, and did well with those. So I was able to roll those today. So I was able to roll three different positions today, which was nice. And maybe if the market does a bounce towards the end of the day, I might still be able to roll some of the others. But with these, one big criteria for me going forward is to be sure that I'm not letting too many expire on any specific week. So I will be trying to move these around a little bit more. And again, like big lots, I'm going to really do my due diligence to be sure. All of these companies I do like, even Lumen I like, but there are a few others that have changed. If with big lots, their estimates look good. Suddenly, everything changed. They had way too much inventory, and they actually took a loss for the quarter. So that kind of came out of nowhere. From the looking at it, it looked like they were going to be doing really well going forward, and their estimates were way off. So um, those are the primary tips. Doing this kind of planning. And for those of you who have seen these videos before with my planning worksheet, I've actually extended it quite a bit. I've added a lot more. So I've added trade dates, expiration, current price, ex-dividend dates. I've even added earnings, where I'll mention the earnings and what I'm doing with each position, and then also the premium with notes and more information. So I'm doing my due diligence to try to keep a lot more of this information available to help me make these kind of decisions and plan better. And you can already see I'm doing fairly well this month, but I don't know, I'm probably going to take some losses before the end of the month with all these assignments occurring. So that's it. I hope you enjoyed this. I hope you're surviving these crazy markets and you'll come out ahead at the end. So thanks again, and I hope you have a wonderful day.